Dow component, Walmart, as you saw at the bottom of your screen, is out with earnings, $1.08 a share. And that was well above, or at least a little bit above, the $1.01, which was the estimate. That's an adjusted number. And then the revenue is a slight miss, but we're talking about $125 billion worth. And if you factor out currency factors, I think it was actually a little bit above.
Ex-currency, it was $126.1 billion. Right. With currency, it was $124.9 billion. The street estimate was $125.5 billion. Maybe more importantly is the guidance that they're offering.
And the comp, too. 3.4 was above, right?
Right. Comps, U.S. comps 3.4. Was that above, Courtney?
Yes. The U.S. comps, the analyst expectation for that was 3.1, so 3.4 is above that.
Very quickly, before we get into what you've heard in terms of guidance, we should point out the company's overall guidance. They're now looking for adjusted guidance of $4.75 a share to $4.85 a share for the full year. Their earlier guidance had been $4.65 to $4.80, so that raises the lower end by 10 cents and the upper end by 5 cents. The street was already at $4.79. Yeah. They're also saying U.S. comps of at least 3%. Versus of about 3% they were saying before. So that's pretty significant, right?
Right, it is pretty significant. And I really like to look at the U.S. comp growth streak. I think we have a chart of this just over time because it is pretty impressive to have a retailer the size of Walmart and to have 16 straight quarters of U.S. comp sales growth. I mean, that is impressive. So they just logged in 3.4% here for this quarter. And then in-store traffic grew as well, up 1.2%. Again, that number sounds small, but think about the millions of people that walk through a Walmart store every day. Right. And to keep growing traffic.
A lot of large numbers. That's
and so traffic is now up for 15 consecutive quarters for Walmart U.S. And then the net e-commerce sales, Becky, I know you look at that pretty closely, up 43%. So that rate is actually the highest rate so far this year.
Stronger than we've seen.
Exactly.
Right? Yeah.
And they had aimed for 40% overall for the average for this year. So 43% is the strongest number we've seen yet. And of course, we're going into the fourth quarter, which tends to be a higher penetration and over-index for a lot of companies. And Macy's pointed that out yesterday. And I did speak with Walmart CFO Brett Biggs on the phone briefly today, and he just keeps reminding us that the pace of change inside the company continues to accelerate, and they're still obviously doing a good job managing the fundamentals. And then when it comes to the consumer and sort of worries that have been expressed here on CNBC and otherwise that maybe the best is behind us, Brett Biggs says, look, we haven't seen a change in the consumer in the third quarter, and I think the consumer is pretty strong overall. Fuel prices historically in good shape. Unemployment is low, so they're confident going into this holiday season. And then regarding tariffs and the current planned increase of 25% on January 1st, Biggs says, look, our merchants are all over it. They're planning for anything they might encounter next year. We will manage our way through it. But if you have large tariffs, eventually it leads to increases in price for everybody.
Amazing. $500 billion in sales a year
on an annualized basis,
but a $300 billion market cap. So it's selling at what, 60% of sales.
And we still call Walmart the world's largest retailer because of the revenues.
Right. Yeah.
I know we focus a lot on market cap when we look at Amazon.
Well, but if you look at it, I mean, years ago it was 10% of all U.S. retail sales. I can only guess that number's gone up over time as the company's gotten